CNBC TV18, embarking on a quarter century of excellence.
Welcome back. Well, that large trade on Axis Bank actually has taken place, and it's happened in the pre-open window. So it'll be interesting to see how the stock reacts in today's trading session, because the market had a sense out there would be some kind of shorting that would have been seen out there, which will have to run for cover. So we'll keep an eye out on that stock. Yesterday ending at the high point of the day. Spandana Spurti, though, that's the next stock on our radar. The company has laid out their vision for 2028. They are targeting higher loans from existing borrowers and also looking to bring their cost of borrowing down. Mr. Shalabh Saxena, the Managing Director and CEO of the company, joins us on the show. Hi, Mr. Saxena. Morning, and thanks so much for joining in. Well, let's focus on the dispersals in weekly. You're saying that you're looking to increase it to around 70-80% in the coming years. Tell us, how will this work? And will collections also be weekly?
Yeah, so good morning to you and all your viewers. The fundamental shift in the model that we at Spandana were doing, over the past few years, we are trying to move from a monthly to a weekly model. The weekly model, or rather the microfinance, inherently is a high touch model, and hence it's very important that you are closer to the customer. A weekly model allows you to meet the customer every single week, 52 weeks in a year. And that's the time when you do a health check on the customer, the financial health check of the customer in terms of if she wants a new loan, or how is she doing in terms of repayments. So at this point in time, Spandana 2.0, which is what we've released about 6 quarters back when we took over, the company was 100% monthly. We've opened 500 new branches, which are all weekly. And over the next few quarters, we are going to transition the monthly model to a weekly model as well, because we, the management, feel that inherently a weekly model is much stronger than a monthly. And yes, the answer to your question is, both the disbursement and the collection of installments is weekly.
Okay, disbursement and collection of installments is weekly. How do you plan to transition to digital payments in an effective manner? Because I think, once you do that effectively, that will help you in improving your collections as well.
Yeah, so, so there are 2 answers to this. The first is our disbursements are 100% digital. It straight away goes into the bank account, so there's no cash involvement. However, when it comes to collection, what's very, very critical is, we as a company follow the joint liability group model, where it is important and imperative that the customer comes into the center meeting at a predetermined time. And that is when, the collection happens. So at that point in time, we collect the money, which is at this point in time almost 100% cash. There are 2 reasons for this. The first, digital options are there for the customers who are not around at that point in time, if they have migrated or they are at some other place. But that is more an isolated incidence, because what we insist on is a physical collection, so that the customers come to the meeting. Our experience has been that Our experience has been that if you give that option to the customer, they stop coming. So there is some discipline that needs to be installed. But yes, way forward will be digital collections. At this point in time, we are all physical.
Shalabh, hi, good morning. Is there a risk of over-leveraged customers? I mean, borrowing from various institutions. How would you ensure that it's not a risk and, you get paid?
Prashant, what has happened is, ever since the new regulation, the FOIR regulations of Reserve Bank has come, they are in vogue since March of 22. What we have, we follow it strictly, and there are very clear prescribed guidelines in terms of what are the household incomes that you can source the customers, what is the household income of the customer, and this includes the income of the spouse as well. And corresponding to the income, there is a liability where there are very prescribed guidelines. So if the customer falls into that bracket, is when you kind of trigger a new disbursement or a loan. Otherwise, you stay away from the customer from a microfinance point of view. So we follow it diligently, and that kind of ensures that the leverage part is taken care of, Prashant.
Okay, all right. Mr. Saxena, if you could tell us what was the cost of borrowing of the last quarter? And you've been mentioning that you're looking to reduce the cost of borrowing. So how do you changing your borrowing mix?
Yeah, so the last quarter, the marginal cost was about 12.3%, and I think on your show the last time around, I had said that I think my guess is that we've kind of peaked out from a cost point of view, and the only way we as an institution will go now will be south from from a pure play cost of borrowing point of view. The reasons are as follows. We had a growth target to pursue, so we borrowed slightly more than what was comfortable from the capital market. The bank contribution was about 49-50%. So we intend, from a diversification point of view and raising and improving the mix, we intend taking the bank share up from the current 50% levels to about 65-70 in the short term. On the capital market side, the current number is about 28% in the mix. That we are planning to get it down to about 15%. And we will now explore the offshore borrowings, the ECB route, etc., so that we inherently have that cost advantage.
Shalabh, we'll leave it there. Thank you very much for joining us with that crisp sort of take in terms of how the business is going to pan out. Appreciate it very much here on CNBC TV 18.